So, checking the daily chart. Actually, let's go back and check the calendar real quick, which is something we should be doing. All right. So, by checking on the calendar, we see most of the news has come out. We have some more U.S. Speakers. We have another speaker in 42 minutes, and then we have Miss Lagarde in an hour. And so, we have to be aware of the fact that there's volatility coming through. Besides that, we have end of month. So with end of month, usually we get extra liquidity. So there's extra volatility expected. And value date is really the focus. So end of month is general, but value date is literally 2 days before the end of the month. And so it's starting to approach it. It's coming our way, right? So expect volatility going into the end of the month. If we look at the bigger picture, today is bullish. We're making higher highs. We've made a higher low. Average day is 66 pips. And just today, only today, it's 50. So we still have some room left. Understanding where we're coming from and then trying to figure out where we're going requires us. Oops, I don't want to remove this. It requires that we start drawing lines, right? So we have to start looking and seeing where volatility, where the support and resistance areas will be and where we expect them to be. And then that's our that's our axiom number one, right? We trade off of our expectations, our probabilities. And so we approach this line. That line is not random. It comes from the left, right? Far over here. We're looking at all that support slash resistance. We expect that we're going to run into this. And then from here, we want to be, thinking about selling. We know this is not on the way to the moon, right? And we also measured the average day. We're near the top of the average day. Time of day tells me that if I show up at this time, I should be near the high of the day, right? So situationally, I'm already expecting a turn near here. I'm just trying to find where it might be coming in. Right? This is why we're doing this top-down analysis. We're measuring the past, right? We're measuring the past. We're building this expectation in our mind. We're building a plan, and then we're trading in that plan. And so having worked down from the daily, we know there's higher highs and higher lows. On the hourly, we can see the same structure with a little bit more detail. And I've already started to draw the lines on the hourly. On the 5 minutes, I repeat the same steps, right? Except here, the levels are closer, they're more defined, they're cheaper, right? So if I make a mistake on this 5 minute chart, my expectation is cheaper, right? I can spend a little bit more money. I can average my way out. I can find a solution to whatever problem I get myself into. As of this morning, I had no choice but to hedge because we made a higher high, right? Right, right here. And so the point three is hedging the shorts. Ideally, we were supposed to have gone to around 0930 by now, and instead we've broken the high, right? So situationally, we're in the pickle, but we're not broke. We have tools in our toolbox to fix this. And ideally, it takes time, right? So as long as you don't throw in the towel and you don't give up, you can figure out the problem. You can figure out the solution to the problem and then execute that solution and then eventually resolve the problem. All right. So my problem is I'm in drawdown on the short side. And since the market made a higher high, I had no choice but to hedge. And so as soon as I went into the hedge, right, so that evens out with my shorts. And now I'm playing the long side and I've been buying support until I get to my next target. And at that next target, I become a seller again, right? So I'm making money on the way up while I'm pausing the shorts that are already there, right? These are not canceled, they're not closed, they're not losses, they're paused. And the reason that the ability to pause is only because I went in the opposite direction for the same amount, right? So if I have zero point 0.3 in shorts, I have 0.3 in longs. And so the two even out. And that leaves me free to trade what I think is next, in this case, the long side, right? So I'm just buying the long side. I have my next target where I want to become a seller, right? So I know already where I want to sell. I just don't think uh, I need to be selling right away, right? I want to pace myself because I'm hedged. And so in this space here, I have limited ability. It's not like I'm able to spend boxes and boxes and boxes, right? They're already spoken for. And so I have to really back off the clicking button there. I'm still trying to make a little bit of money. We're starting with 1075, right? So the goal for me today is to buy support, right? Find the high, find that resistance we're looking for, which we assume is near here, right? The assumption is what we're trading, right? So if I go far enough to the left, I'm trading in this zone here, right? That line right there, that's what I expect the market to be bumping into. It might actually go up a little bit right there, right? So this is what we expect the market to run into. And then from there, the ability to rotate is very, very high, right? The market's ability to go back down is extremely high from here. And so that's the logical step, right? We have to get to that higher high and then become a seller. So on the way there, it's clearly making higher highs, higher lows. We're going to behave in that fashion ourselves, right? So we're going to follow the market. We're going to trade with the wind in our sails. If we use the box to measure from the top, we've already pulled back 1, 2, right? And it is the time of day, right? At this time of day, we expect a pullback, right? According to the circadian nature, this is right on schedule, right? So it's pulling back. It's allowing me to build a long position, which I'll get rid of a little bit higher and become a seller once more, right? So once I become a seller from a higher high, the edge itself, the actual hedge will stay until we get back to that level, and then I can close it. Right. The problem is if I've removed the hedge too early, I'm opening up myself to risk because I don't have stop losses on my shorts. Right. This is the stop loss to all my shorts. And so I can't get rid of this. Right. I can't, this has to stay open until I know, or at least I have a better probability of breaking lower and staying lower. Okay, so it's the timing, right? My time of day, my approach between 10 o'clock New York and lunchtime New York puts me in this environment, right? Upside down to the trend. And that's kind of what I exploit. If you're here for the 2 hours and only the 2 hours, you're positioning yourself to do something similar, right? As I'm sitting here, trading all day long, teaching this all day long, I have myself positioned into trades that sometimes will take days to close, right? So I'm carrying drawdown, I'm managing the account, I'm managing the drawdown itself is work in progress. That's where our focus is. We're managing the work that's in progress. We're not looking to open more trades. Ideally, we're opening what we can and then managing what doesn't work. That's our mission statement. All right. So if I can buy right here, all right, I'm not thinking it's going to the moon. I'm just thinking it's going to resistance, which we've already highlighted. It's trying to get there. Once we get in that zone, selling is the key, right? When we go to the bigger picture, if we go to the weekly, I'll do it over here. If we go to the weekly and you put a Fibonacci on this, right, we're at the 61% retracement. And, considering this is not a game of accuracy, but rather it's like uh, government work, we're in the vicinity, right? This is close enough. You could be plus or minus, 30 pips on either side of that 61%, and it's still a normal move. There's nothing abnormal here. There's nothing awkward or weird, right? It's not a game of, oh, I touched the line, the move is finished. No, it's just a ballpark. And the ballpark is really our mindset and the way we look at it, the ballpark is 4 boxes, right? So that's where the 36 pips comes from, right? 4 times 9. And so if my box is 9 pips and I'm allowed 4 of them, I have this wide range. I have this wide berth. I have a lot of space to use. And that space overlaps, right? So from day to day to day, I have a direction in mind, but because of all this overlapping, sometimes I'm not going anywhere, right? We think all week I've been aiming for 930, 830, 760, right? I've been aiming for lower lows. We've been getting lower lows, right? But that stopped yesterday. And so we have to protect, or I have to protect what's there. I put a hedge, and this morning the hedge triggered. Right? So I'm still holding on to shorts. I'm still thinking we are going lower. This is why I assume, and I'm betting that today is a turnaround Tuesday. Right? I'm betting that we will make a high and then fall from there. Right? I'm getting a little bit nervous that this might have been it here. So we'll see. Right? We'll see. Theoretically, we should be moving in boxes, right? So we're stacking our boxes. We've already moved 5 boxes from this low. We're pulling back 2 boxes. So that's like a reset. And now what if we move 3 to 4 boxes forward, right? That takes us to the 1.1, right? So 3 boxes from here takes us to 1.1. And then we would start to sell again. Right? So becoming a seller or remaining a seller is kind of what I have to do, right? Because I'm already positioned that way. I'm just using the weak dollar today to make bullish trades. I'm not thinking the dollar is weak forever and ever. I'm just exploiting it as is, right? And think of it in the big picture. It's month end, it's value date, right? So there's a, a ton of traders positioning themselves, and I mean big traders positioning themselves, not Joe Public. And so what's happening here is the tide coming in. We have to ride that. We have to survive this month end type of event, and then we have uh, news Wednesday, Thursday that should deliver volatility. And just today, in a few minutes, in 40 minutes, we have a speech from Lagarde. I think it's a recorded speech, so it's not a live event. But either case, it should provide us a little bit of liquidity. Right. So buying support for today is the name of the game, only until a slightly higher high, which in essence would fulfill the ADR, average daily range. From that higher high, I want to become a seller once more, right? I do think we are going much lower. What will happen next, right? A month ago, before this break, right there, we were looking at going down. Since that break, we spent the amount of time and the amount of space, 320 pips. We spent it in the opposite direction, right? So if that is our limit, according to Fibonacci, we're in the ballpark. What's the next move, right? The next leg is pointing down. We're trying to pinpoint it. We're trying to figure out where that begins. We know we're in the zone, right? We've already calculated, we've figured out the resistance is near here. It's now surviving, right? We're trying to survive this push lower, but it has to come apparently from a higher high. And that's the unknown that we deal with, right? This higher high business. We just don't know how high is high enough. And so we become sellers at resistance. If resistance holds, we make money. If it breaks, we have drawdown. And that's how we built this position over a course of a week, right? I've been selling with expectancy of lower lows. And instead, we've been making money every day and carrying a little bit of drawdown every day, right? So remember, we started with swing trades right here. And we could have closed the swing trades ahead of the target. So we could have broke the rule, intervene with the swing trade, which is kind of what we're not supposed to do. But, nobody knows the future, right? So right there, that's a telltale sign that it's not trying to go lower, right? It's making a higher high. There's a million ways to look at this, with hindsight. In real time, I think we're doing pretty good. The account is growing, the risk is managed, and we're not losing our shirt. I'm actually having fun doing this. It's not every day that you end up solving issues and being happy about it. Most people get up, get out of bed, fight fires, only to hope not to do it again. I get up, I get out of bed, I fight fires, and I enjoy doing it. I have fun doing this. It's like a puzzle that you are in control. You control what happens to you. And our psychology is what delivers the results. The strategies just gives you instructions, but your psychology allows you to survive. And right, so let's see if we can get it up one more push higher. This is the bottom of the hour. This is when the pullback should have run its course. And this is when I expect a higher high. And somewhere in this area up here, I'm going to be getting rid of the longs, and I'm going to add to my cells, the existing cells. Viewing options, positions, orders. Right, so if I can get it up there, near this purple line there, I'll be selling that. Right, so we've built this big position of shorts. We've made money every day, and postponing gratification is what we do best, right? So building a model that will pay at a later time, right? So our model has been built. It's taken us almost a week and a half. If everything plays according to plan, today should be the top, right? So this is it. It's either do or die after today with this model, with what we've built here, right? So I'm looking for the high to come in somewhere around 1.1, and then we fall from here, right? Imagine the moon. To get to the moon, you have to break a whole pile of resistance, clearly visible on the 1 hour chart, right? To get to the moon, you have to go through all of this, right? Very, very unlikely, right? for this to keep going higher and higher and higher, you have to break through all of this stuff. And this is the problem we have. Right? We made lower lows. Are we going to make a higher high? Probably not. Right. So when you do the Fibonacci work and you see yourself, you're already at 61, plus or minus a few boxes on this scale, that's nothing to sneeze at. It's normal, it's expected. It makes sense that we push back down from here. Okay, so it's all very temporary. Nothing we do lasts forever. We're hoping it lasts only a couple of minutes, right? I was not planning on being short for 2 weeks. The situation we built, the market that was provided to us, allowed us to build this great big position. Ultimately, this should play out really, really nice. I'm still bearish on the euro. We mentioned that before. It's the cleanest shirt in the laundry hamper. Right? All the currencies have issues. The U.S. has the ability to deal with its issues. So, yeah, let's expect this to go slightly higher, and then we'll sell more. For here right now, I want to take a buy. Right, so I have my hedge trade, and then I have 1, 2, 3 clicks above and beyond that. And I'm allowed 4 clicks per box. Right, so if I exclude the hedge trade, I'm allowed 1 more click here. The thing with hedging is people employ it at the worst possible time. It's like it's the last thing that crosses their mind instead of being the first thing. If you're going to use hedging, you have to plan ahead. You have to know where you're going to trigger the hedge. You're going to know. I've had that pending trade since we made the high at 65. Right, so I had that pending hedge trade up there for days. It was not a surprise that I got triggered in. I didn't trigger the hedge out of a surprise. It's not because I got painted into a corner. Right? It became a plan. It became an active plan. It was once a plan B days ago. Right? So it's this idea that I'm not scared into it. I'm not forced into it. I'm here because I want to be here. I'm hedged because I want to be hedged. Right? And so the hedging is just pressing a pause button, right? It's pausing my shorts from accruing more and more and more drawdown. It doesn't make those shorts disappear. It doesn't make those losses go away. That it doesn't make that drawdown go away. It just pauses it from growing bigger. It's up to me to continue to make money with the hedge on. So the account is still growing. We're at 76. I'll reopen that trade. And if we go into this box down here, I'm allowed 4 more. And so 4 trades per box. Some of you have 5 or 6. That's okay. Whatever 1% of your account is, 1% of the equity, right? Take that 1% based on the 36 pip stop. If it gives you, 13 mini lots, then, split that up into 4 or 5. So you have 4 or 5 clicks per box, and something manageable. And like you see here, the trade opens and closes, and I recycle it. Right? So I try to not go over the 4 or 5 clicks per box. Right? So the money management is a piece of the equation. If you start small, just micro lots, the smallest position you can use, then it's very hard to blow up, unless you put them all on the line, unless you put all your money to work, which is what we're trying to avoid doing. Right? So let's see if we can bounce from here. And then if we don't bounce from here, we'll have to deal with the hedges, right? We'll have to figure out a way to maybe book the loss and trade short again, right? So let's see what happens, right? Losing is part of the game. It's not something we must ignore. It's something we must appreciate. Right? I want to lose on my terms. That's where the difference is. Yeah, there we go. There we go. There we go. Yeah, this, you know, the size of the ocean we're swimming in is one thing, and then the participants we're competing against, that's something else. And days like today, value date and month end, and the circadian nature of the market, you know, especially on the monthly scale, there's billions of dollars moving around for positioning purposes, right? These guys have a purpose, that, and it's not just, you know, speculation. So this is what catches us by surprise. Right? Why is it going to 1.1? It's not retail traders doing it. Right, so we've recycled a few trades. I'm going to reopen my same trades again. Right, one. If I come back to support right here, I'll take another. Right. Those green lines just highlight the trades that closed. So we're buying at support. The hedge is protecting the position that was built over days. So it's doubtful that the euro closes at the high. You know, there's usually a wick on the yearly scale, the monthly scale, the weekly scale, on all scales, right? And so, uh, just to, you know, to make sure, put an RSI on any one of your time frames, and I'm pretty adamant on a day like today, you're going to see divergence, right? So let's see. Let's remove the positions, remove the orders, put on an indicator called RSI. Open up the time frame so I can see a little bit more. So this is on the daily. On the daily, we have bullish momentum and bearish relative strength, right? So there's divergence here. And if you go down even to an hourly, you'll see the same thing, right? Bullish, bearish. And this is one of the reasons why we've been so busy selling from all the way up here, right? We've been selling for over a week now because of this, right? Because of this. And so it's pushing beyond its normal expected range, right? We understand this is the place to sell, right? This is a selling opportunity. If you go down to even a 15 minutes, I'm sure you'll see it there too. Like even on the 15 minutes, there's divergence. And so it's a matter of creating that little thesis for yourself, you know, trade what you see. And then that will change bar by bar. It may reaffirm what you think, or it may go totally against what your plan was. And now it's like, oh my God, what am I doing here? That's the key, right? This feeling that you have that, oh my God, what am I doing here? After a while, it's routine. you'll know exactly what you're doing here because you've measured it a million times. You've seen it fall within the same four boxes. It's just presented to you differently every time, right? So we're putting this frame of reference so that we can see consistency. We want to extract consistency from what looks to be random. Right? It looks to be random. It's not random. We define this with our boxes. Right? So here I am given the opportunity to buy one more. And I just took it. Yeah. One, two, three. I'm allowed one more click. Last one. Right, so if we push a little bit higher, so in this upper box or higher, anywhere up here, I will want to stop buying and start selling, right? So around the 995, 1.1, that's a pretty wide range up there, right? In this zone up here, I want to be a seller of the euro up there. And that's only because we look left and we see a ton of resistance on the much, much, much higher time frame. Oops, this is supposed to stay there. Right over here. All of that is holding up the euro and hoping, I'm hoping it will help us push the euro back down, right? But from a slightly higher high. When we look at the 5-minute chart and we draw this ladder every day, the ladder only looks at the vicinity, what's happening right here, right now. Right? It's like the memory of a goldfish. And then with this idea that the market is bouncing between these levels, you ask yourself, am I going to bounce off of here or am I going to break through here? And then we deal with the facts, so if it's a bounce, it's a couple of pips in our pocket. If it's a break, it ends up having to be fixed, right? So the fix is what we get involved with. Most people don't try to fix their trades, right? They watch it go to the stop loss. The fix is really our secret weapon. Right? So this right here, a retracement from the high, 1, 2 boxes is normal, right? It's not weird, it's not strange, it's not intrusive. Even if it went a third box, that would be normal, right? Considering we went up 5 boxes, going down or giving back half of that would be expected, so to speak. That's a big word, but that's kind of the model. Here's that value date stuff. Yeah. Trying to compete, trying to fight this is what gets people in trouble. Right? Not understanding that time of day, time of the week, time of the month, all of that has an impact on who does what and why they're doing it. And then 2 bars like this out of the blue for no reason that's kind of what happens. Yeah, and when a plan works, but that proves the point, right? Hedging, had we not hedged, all of our trades, a week of work would have gone to shit. I mean, to the pooper. And so, this idea, turn around Tuesday, this looks fascinating to a lot of bulls. Are they going to chase this to the moon? And we know we need to start selling into this, right? Near here, like right around here, actually, is where I want to close my longs, right? And start to sell. And so now you'll notice I'm selling against the hedge, right? I'm long. The longs are compensating for these shorts. So this is basically null and void. This is, equals to zero. And now I'm shorting above and beyond that. Okay, so my hedge is net zero. And now I'm building a short above and beyond that. Okay, right there. Boom, boom. It's the beauty of it. The plan just works. Right? Be selling, right? And then we keep the hedge on until we get back to that level down here. All right, we're making the money. Market might push up another 5 or 6 pips. But I doubt it's going to have the legs to go a lot further than that. And then I think at the top of the hour, 20 minutes or so, Miss Lagarde has a recorded speech. And I think there's other stuff too that's scheduled around that time. Oh, there we go, 1.1. This is where that's where the pain threshold is. A lot of people are giving up here, or at least chasing this up, and they're buying it from us. All right, turn around Tuesday. You ready? Yep, when a plan just works. Right around here. That last one. Boom. So I have 1, 2, 3, 4. Divergence everywhere, right? All the time frames are diverting right here. And so uh, the ability of the euro to push and push and push is greatly diminished here. Yeah. Let's see. I think it was Lawrence. Laurence was looking for 1.1. You got it. Right? It's how do you deal with the path on the way there? That's where the problem is. Like for you and I, for having opposite views, we're both making money. Right? It takes two to make a market, and that's the gist of it, right? Understanding that we're both right, and yet we're both wrong, and we're both making money. Right? So we met the goal, we met the target. We're now selling from the high. I'll take a trade here and remove the target. I'll do that twice actually. Right. So now I have two trades at 1.1. Okay. And so ideally, if you look at the monthly candle, let's go take a look at the monthly candle. What we've just done is we've picked the very, very top of November. Boom, right here, right now. We have picked the very, very top of November. And there is 2 days left to the month. Do you think it's going much higher? Or do you think it's going to pull back and create a wick like all the other candles tend to have? I'm putting my money on the wick. And that's why I'm leaving that candle. Sorry, I'm leaving those trades without a target. Okay, so situationally, we are at the very, 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 very top of the month of November. If you look at it weekly, right, it's taken us 4 weeks to get here, and it's likely going to be the end. Like today is the last push, right? Today is the last push. We made it to the target. On an hourly, we're already starting to pull back. And then when we go down to our 5 minute, our ladder, the ladder that we drew earlier, is now becoming active again, right? We can start to use our levels that we expected would come into use. Right, so nothing here is weird or abnormal or strange. We kind of saw it coming. How we deal with the facts is what creates the trader, right? And the tools in our toolbox are always there. They're always the same tools. Imagine yourself an auto mechanic. Somebody brings a car for you to fix. It's a different problem every day, but you don't go buy new tools every day, right? So I only have one toolbox. I only have one set of tools, and that's the idea. Try to not get into the mess in the first place, but if you have to, do what you need to do, right? To fight your way out. So we're selling from the very, very top on Turnaround Tuesday. Laurence was right all along. This counter trend stuff, sometimes it's exactly what you must do to make your money. It depends on your perception and the amount of time that you have. And so what we learn to do with this method is to back off. 1/4%, 0.5% per day is life changing. We just have to agree with that. And then, the account is still growing, even if we're carrying drawdown, right? So work in progress is not the issue. Work in progress that's not working, that's the issue, right? So, yeah, you must open trades in order to close them with or without profit, right? And so if you don't open the trade, if you don't have work in progress, you're not going to make any money. And once that work is in progress, how you manage it emotionally, that's the difference, right? You need to learn to manage your emotions. Right? The losses are part of a plan. They're integrated in the strategy. They're in the system, right? They're right on the edge of box 5 for a reason. Yeah, this is awesome. Awesome, awesome, awesome. Yeah, it's learn to manage drawdown. Learn to appreciate drawdown is not a loss. A loss is a closed trade. That money is gone. Drawdown is an open trade, and that you're in control of. Right? So it's a different mindset. Once we appreciate the fact that I refuse to give up control. And so, how do I know I'm wrong? By defining it up front, by knowing before I place the trade. Right. So, in our case, this hedge that I'm in, I kind of saw that coming 3 days ago, right? It was up there waiting and waiting and waiting until today. The plan was already in effect. The upcoming speech, yeah, if you can, just pause things. It, it's a recorded message, so I don't think it's going to have, you know, a, I don't think it's going to rock our world, but might, it just might, right? We just don't know. And it's all about managing that risk. And so I'm already hedged. I can't, I can't triple hedge. I can't, put another hedge on. And so in the next 5 minutes or so, uh, uh, I guess we'll see what happens. Right? If it pushes higher, uh, ideally I'll be able to trade the long side because of my existing long position, but I don't want to add any more shorts. Right? I just want to close some of the stuff that's already there if I can. It's already starting to gap down. We've been looking at that 1.1 now for 2 weeks, right, Laurence? It's been it's been in our sights for a long, long time, right? And this idea is you trade what you perceive to be the facts, and I trade what I perceive to be the facts, because we're looking at things at different times of day with different news on the calendar, different information. We trade opposite to each other, and that's perfectly okay, right? As long as you know where you're wrong and I know where I'm wrong. Yep, yep, exactly. There you go. Yeah. And the bigger time frames, we're building them 1 minute at a time. This is why I tell you guys, please, please start on the day. Look at the day before you click on anything. Look at what it is you're clicking into. And lo and behold, 5 days makes a weekly candle, right? So yeah, the patterns were there. The delusion was not really delusional, right? It's uh, it's there. It's in the forefront. We just have to create a plan that gets us there, and along the way, you create Plan B, an alternative. Yeah, and in my mind, the alternative, because it's a low probability, but it still can happen, just like today did. It's it's incorporated. I always have Plan B, even if Plan B leads to Plan C, right? So it's this approach. It's not one and done. It's many, 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 many trades, and then the average of many, many, many said trades is what I earn, right? So I'm willing to give up on some of my trades, just like when I play chess, right? You're willing to give up a few pieces along the way in order to guarantee the win. You must lose some men when you have war. Yeah, so I you the bias is one thing, but trading the facts is something else, right? Having that bigger picture, that's the key. That's one of the keys. That's what we're building is that bigger picture, but you have to do it 2 hours per day. And in that 2 hours per day, that could be opposite to your bigger picture. And when I come in for the North American session, which, you know, generally speaking, is the last half, it's the second half of the day. So I'm here to finish the day. I'm here to close the daily candle. And with that in mind, I'm usually expressing that through a pullback or through some kind of counter trend move, right? So you in Europe might be looking at the front of the day, on the front half of the day. You're trying to grow the daily candle when I'm trying to close the daily candle, right? So depending on where you are and what you're looking at, you have a different goal, you have a different expectation for your 2 hours. Yeah. Oh, yeah, it does. Absolutely. And there's information that changes that, right? So sometimes it's news that creates that volatility. Sometimes it's, sentiment that creates that change in those 8 hours. uh, 8 hours is a long time.